So here we go. This is the reasons why I think that financial advisors should be taking a very hard look at Bitcoin right now. Not as a warning or a threat or anything like that, but a very big opportunity for financial advisors. And not only to help their clients get into the Bitcoin ETFs, but to actually help their clients learn about Bitcoin and to allocate a very small portion of their portfolio into holding Bitcoin themselves in self-custody. And I don't expect any financial advisors to be in a position where they can recommend that to their clients, but they can recommend them to somebody like me who can help them with that. And that's what I want to offer them today. So we got three things here. The first one is performance. The second one is power. And the third one is proven and predictive. And I got a bonus one too. So these are the three P's of why you should be taking a very hard look at Bitcoin right now. So the first one is performance. And I'm going to bring up a chart here, graphic, that's pretty eye-opening, I think. And I don't know how many financial advisors have seen this before. It was actually a financial advisor who sent me this graphic, which is amazing. But here's the Bitcoin performance compared to major asset classes for the last 10 years. So at the top here, you can see the best performers. So 2013, it was Bitcoin, 5,000%. 2014, it was the SPX, 12%, with Bitcoin negative 58. 2015, Bitcoin again, 37%. 2016, Bitcoin again, 120%. 2017, 1,300% Bitcoin once again. 2018 was a tough year. It looks like the best performing asset was AGG, 0% gain. Bitcoin minus 73%. 2019, Bitcoin once again, 92%. 2020, Bitcoin again, 300%. 21, Bitcoin, 60%. 22 is a tough year for Bitcoin, negative 65%. CMT was the highest at 20%. And 2023 last year was 156% Bitcoin again. Cumulative over the 10 years, Bitcoin 315,000% up. Annualized average 124% per year Bitcoin wins. The second is the SPX at 13%. So how could anybody look at that chart and continue to ignore Bitcoin? Anybody who is, I think, is doing a major disservice to their clients. And that's kind of the purpose of this, but also to, like I said, show the opportunity here. So that's the first part. That is the performance. And it's impossible to argue that performance. It's right here in front of you. The numbers are here. The numbers do not lie. And you can verify anything on here if you'd like to. But cumulative 315,000% in the last 10 years, Bitcoin. The best performing asset in 1, 2, 3, 4, 5, 6, 7, 8 out of the last 11 years. So it's performance, pretty good performance. The second one here I want to talk about is the power of Bitcoin. And I'm going to bring up a chart here, or a graphic, I guess you'd say. This is the power of Bitcoin. And what do I mean by the power of Bitcoin? What are you talking about, Jor? So this is let's show the hash rate here. Bring this up. So this is the power of the Bitcoin network. This is what it looks like right now. And you can see this chart here from 2009, when Bitcoin first came out, January 3rd, 2009, up until 2017. The power of Bitcoin was very low. There wasn't a whole lot of people using Bitcoin. There wasn't a whole lot of people mining Bitcoin. But this graphic here shows the total amount of energy that's going into the Bitcoin network right now. Every time somebody plugs in a Bitcoin miner, this goes up. And so this is the total power in the Bitcoin network right now. You can see what happened here. This is in 2021 when China banned Bitcoin mining. It took a very sharp drop as they all had to power down and move. But then within the year, it got back up to where it was, and it's absolutely gone bananas since then. So this is the total power in the Bitcoin network, the total energy and electricity going into securing the network. And so as this chart, it continues to explode, and power continues to flow into Bitcoin, it makes it more secure. It means that more people are mining. It's more secure. It's less risky, obviously. If there's more capital flowing into Bitcoin, the risk of something negative happening to Bitcoin almost is impossible at this point. So as it's called the hash rate, but as the total power continues to rise in Bitcoin, it becomes more and more impossible for anything to shut it down. So that's power. And I think that it's a very important metric that people should be paying attention to. Unfortunately, most people, what the hell's going on here? Unfortunately, most people pay attention to the price. They see it's volatile and that's about it. But this is a very important metric, I think, that most people, and especially financial advisors, are sleeping on. So that is the power in Bitcoin. Pretty good chart. Like I said, every time somebody plugs in a Bitcoin miner, it helps secure the network. It helps decentralize the network. And every time somebody plugs in a miner, that number goes up. So that's what's happening here. More and more people are mining Bitcoin. More and more people are using Bitcoin. And as the adoption increases, because it's a fixed supply, the price of Bitcoin will only continue to go in that direction. So the last one here is proven. Bitcoin is proven now. Back in 2009, if you were lucky enough to hold some Bitcoin or mine some Bitcoin, the network wasn't proven. Bitcoin itself wasn't proven. Hardly anybody was using it. Nobody knew what it was going to be, what it was going to become, if they could stop it, if anybody would shut it down, if Wall Street would embrace it. There was a lot of question marks at that time, back in 2009, pretty much up until 2017. And I think that this is, like I said, I love using this as a metric here because up until 2017, this was basically zero in terms of the hash rate within Bitcoin. So it was very unproven. We didn't know if it was going to work. Nobody knew if it was going to work, if it was going to succeed. But we're kind of at the point now where it has been proven. People are using it. People are mining. If you look at that chart, that shows you exactly what's happening here in Bitcoin. So it's proven. People are using it. People are transacting with it. People are using it as a store of wealth. People are buying it and never selling it. It's proven. And the other part here, just because everything's so uncertain in the world right now, we really have no idea what's going to happen. And if you're in the camp that believes that, things are in a very weird place right now, and we're not really sure what's going to happen in the next couple of years, we started the show saying that with a quote from Balaji that says the banking system broke in 2023. They've just been hiding it in plain sight, and it's already far beyond 2008. So, whether you want to believe that or not, it doesn't really matter. That's the reality of things right now, is that the financial system, the banking system, is in very big trouble. And if you're somebody who believes that something could go wrong in the markets, in the banks, and if you believe that that's coming, you want to have something that you can predict. And so with Bitcoin here, it's something that you don't have to worry about what Jerome Powell is going to say, what the rates are going to be next month, what Apple's going to release for the next product. You don't have to worry about any of that. The Bitcoin itself is very predictive. And I want to stop here and show a clip of what's his name here? You'll see him in a second, but what's this guy's name? Lawrence Lepard. So let me bring this up. I want you to listen to this clip because he talks about this, about how with cash, with gold, with anything, the supply is unknown. And if the demand for an asset increases, we can always increase the supply to meet that demand. So listen to what Lawrence Lepard here, he's been in this industry for a lot of years, 40 years. And this is what he has to say about Bitcoin. And I think it's a perfect message to anybody out there, especially financial advisors. So listen to Lawrence here.
Yeah, think about Bitcoin's a commodity, right? The SEC said it's a commodity. It is a commodity. One coin's the same as the next. Okay, fine. Every commodity in the world, if you increase its price, the supply goes up. If gold went to 10,000 tomorrow, we'd mine more gold. Higher price, you would get more. No matter where the price of Bitcoin goes, the issuance schedule is set. There's not going to be any more. It comes out, every block is, 6.25 coins right now. soon to be half of that. The world has never seen anything that really kind of looks like this. I mean, Bitcoin from inception has grown at 145% compound annually, and it's got a lower Sharpe ratio than any other asset. I mean, this is an amazing beast. It really is. But it's volatile, and to some it's scary, and I get all of that. But, I've long contended that anybody who has zero of this is really, really missing the most asymmetric bet that I've ever seen in 40 plus years of trying to make asymmetric bets. Think about Bitcoin's a commodity, right?
So that's very important. Very important. The fact that regardless of how much demand there is for Bitcoin, we cannot change the supply schedule. Very important. Because there's so many factors that are out of our control in this world, including how much money they print and how much debt they take on. It's completely out of our control. We don't vote on it, and it has a trickle-down effect on everything that we do, including the financial markets. So if you're holding the majority of your wealth or your client's wealth in those assets, you're at a very big disadvantage, and you're at the mercy of what certain people decide to do and say, and what companies release certain products and how they perform. You're at the mercy of all that. With Bitcoin, it's an asset that we know how much there is today. We know how much there's going to be in 5 years from now, in 50 years from now. And I want to show you this. I want to quickly show you this graphic that we show on the show here all the time. But it is the supply schedule of Bitcoin. And I put this into a very easy to read graphic here. And so this is the reward. So every 10 minutes, a new block is created. And every time a new block is created, new Bitcoin are created, or a new block is mined, new Bitcoin are created. So the first epoch was 50 Bitcoin every 10 minutes. Second epoch was 25 Bitcoin every 10 minutes on average. Third epoch was 12.5 Bitcoin. We just moved through this epoch, which was 6.2, and now we're in 3.125 Bitcoin every 10 minutes. And so this is the schedule here. That's what's happened, but then we also know what it is going forward here up until 2136, when the last Bitcoin will be mined. And so the reason these are highlighted here, this is 2064. This is the one that I always talk about here. Because number one, this is within our lifetime, I think, for most of us, hopefully for all of us. But this is 2064. So you can see here that per day right now, in this epoch that we're in, there is 450 Bitcoin created every day. That's where we are today. 450 new Bitcoin are created every day. In 2064, less than one Bitcoin will be created every day within our lifetime. 2064, we're going to move into a world where less than one Bitcoin per day for the entire world, for every person, every company, every country, there's one Bitcoin being created. So, I mean, that sounds cool. It sounds pretty impressive, but the key here that I want to talk about is that it's predictive. There are no external factors that will change that. It's written in the Bitcoin code. And when you have a predictive asset with a fixed supply, that's what you can measure things against. And you can call Bitcoin whatever you want: money, digital gold, digital real estate, inflation hedge, a good savings account. You can call it whatever you want to. It doesn't matter. This is the supply schedule. It's predictive until 2136. Over 100 years from now, we know exactly how much Bitcoin there will be at any given date. And when you can predict something, when you can reliably depend on something like that, you can make a lot better decisions. So that's the 3 P's there: performance, power, and proven/predictive. And I want to give one more here just for a bonus here. So this is we turned from 3 P's into 6 P's pretty fast. So the last one I want to talk about here is the purchasing power. And this is what I really want you to focus on within Bitcoin. Not the price in fiat, not the price in US dollars, but the purchasing power. So if you look at, actually, I'll bring it up here quickly because I do have it on this spreadsheet as well. It's a great spreadsheet. Let's see if I can. There we go. So purchasing power. One thing over time, and that has happened and will continue to happen, is if you measure any asset against Bitcoin, the price of it in Bitcoin has fallen over time. And when people hear that, it's very hard for them to wrap their mind around that. But when you see something like I'm about to show you here, this is the average homes in Canada. So you can see here back in 2015, I highlighted these two because I think that they're fairly reasonable, because these ones are crazy at the start. But in 2015, the average price of a home here in Canada was $413,000. In 2021, it jumped to $688,000, which is crazy for one. But you know, people see that and they think, oh, well, my house went up in value. My house is worth more. It went from 400,000 to almost 700,000 in 6 years. So I'm doing pretty well. My house went up in value. But did it really? Did you add anything to it? Was anything built around your house that would actually add value? Or was it just the fiat dollar going down in purchasing power? So that same price that same house in 2015 would have cost you over 1,000 Bitcoin. In 2021, it would have cost you 13 Bitcoin. So even though the price went up in dollars, even though it appears to have gone up in value, it actually went down significantly in terms of Bitcoin. And that's just 2 years out of this, but you can see the trend here. Overall, this is a 15-year schedule here, went from $340,000 to $694,000 in 15 years. In Bitcoin, it went from 4.8 million Bitcoin to 11 Bitcoin for your average house. So that's real estate. That's one asset class that has gone down in terms of Bitcoin and will continue to go down in terms of Bitcoin because it's a scarce asset with a fixed supply, and everything else, including real estate, will continue to go down in price compared to Bitcoin over time. So there you go. You have performance, power, proven and predictive, and then the purchasing power. That's what I want you to focus on. Don't worry about the price of Bitcoin. Focus on the purchasing power increase of Bitcoin over time. So there you go. Let's the last thing I want to say here is that if you are watching this, okay, let me catch up on the chat here a little bit. Sharp correction, that's what it was. Jason says, I don't think financial advisors are financially incentivized to show Bitcoin, at least not yet. And that's exactly what it is. That's exactly the problem. They're not financially incentivized to show Bitcoin. They haven't taken any time to learn Bitcoin, so they don't understand what's going on here. And they're doing their clients a significant disservice. Jose says there hasn't been a Bitcoin pump since 2017. Well, last year, 2023, 150%, pretty good, I would say. Tommy D says investing in Bitcoin requires prudence and patience. And Kev says Bitcoin is an arc. It really is. And this is what I want to kind of end with here, a couple things. But Bitcoin is an arc. It's a lifeboat. And Bitcoin, what I would say to anybody out there, if you're a financial advisor or if you have a financial advisor, friend, family member, and you send this to them, this is what I want you to think about. There is a huge opportunity here for you. Because if you think about how many financial advisors are out there, it's a very competitive space. How do you set yourself apart from other financial advisors? Companies come out with different funds, different products that they try to talk their clients into buying. But if you really want to set yourself apart today, this is the biggest opportunity that has come and will come in your lifetime. Because one thing we talk about on the show quite a bit, and especially in Living in the Future, is there's a difference between competing and creating. And that's the difference in life. There's 95% of people who are all competing, doing the exact same thing, offering the same products, talking about owning the same stocks. The 95% of people, that's a very competitive market. And if you're willing to take some risk, you can be in the 5% here. Of the 5% of financial advisors, initially, everybody eventually will hold Bitcoin and offer it to their clients. But the 5% of financial advisors who are Bitcoin friendly and who are explaining this to their clients are going to be in a very opportune position for this next decade. So instead of competing against the 95% of advisors who are doing the exact same thing, selling the same products, why don't you be in the 5% and just take a bit of risk on here? And if you look at the performance, the power, and the predictive nature of Bitcoin, it's not much of a risk, honestly. It's just something different that you've never been part of before. So instead of being in the 95%, be in the 5%. Start talking about this with your Bitcoin, with your clients, and start very slow. That's the other part too. Start educating yourself. Start allocating a very small percent of your funds, your clients' funds, into Bitcoin. Start very slow. Because the last thing you want to do is get into this, allocate a whole bunch of your investment portfolio into Bitcoin, and then things go down a little bit, and then all of a sudden you start to panic. So very easy, 1 or 2%, 3% allocation to Bitcoin. Start very slow. So the last thing here is this is kind of from their shoes, and I think this relates to anybody out there, but especially financial advisors, is you have to consider the worst case and the best case here. So I want to talk about two different situations here because you have two options right now. You can continue ignoring Bitcoin and hope that it goes away, or you can embrace Bitcoin and start talking to your clients about it, start being open to it, start learning about it. Those are your two options. So this is the worst case in terms of you actually embracing Bitcoin and choosing to be in the 5% of financial advisors who are Bitcoin friendly. So this is the worst case. You're wrong about it. And Bitcoin goes to zero. That's the worst case. So if you take my advice, start slow, you allocate 1 or 2% of your client's portfolio based on what I showed today, you lose 1 or 2% of your client's portfolio. Goes to zero. Bitcoin goes to zero. You're wrong. Your clients are pissed. But I think that they would still be understanding. If you go through this whole thing and you explain why you think that they should, there would be, unless somebody's very unreasonable, they would understand why you're explaining this to them. And I think that they would actually be very much appreciative of that. The best case, though, is that your clients see 150% returns on average. And for these next 2 years, I think it's going to be much higher than that. But they get to be part of this whole Bitcoin price movement here and purchasing power increase. And they thank you. They send you the nicest bottle of wine this Christmas for getting them into Bitcoin, seeing these gains, and being part of this new financial revolution happening here. So that's if you decide to embrace Bitcoin. This is if you decide to continue to ignore Bitcoin and hopefully hope that it goes away. The worst case is that Bitcoin goes up another 150%, maybe 500% this year. Your clients leave you. Your clients sue you. Your clients lose wealth. They lose the opportunity that was so clearly right in front of your face. You miss out on all that, and you lose your clients and your wealth. That's the worst case. And I mean, could be more too. Maybe your wife's pissed that you ignored Bitcoin and she leaves you too. Not funny, but reality. Like these are the things that happen when you lose your clients, you lose your wealth. That's when everything goes to shit. So that's the worst case. The best case is that your portfolio, your fund keeps earning 7, 8, 9, 10%, barely keeping up with inflation. Your clients are wondering what's going on. Why haven't you allocated anything to Bitcoin here? So that's the best case. There is your Bitcoin. You were right about Bitcoin. It fails, and you keep earning 8%. They keep kicking the can further down the road, and we continue living in this system of illusion. Is that the best case? Is that something that sounds really good to live in and to pursue? I don't know. So that's my message to financial advisors out there. And like I said, I would highly encourage you, if you have a financial advisor in your life, send them the video of this, either this full show or the clip that I'm going to do after the show. And then just ask to have a conversation with them. Ask their opinion on it. Ask them how much time they've spent learning about Bitcoin. And the last thing I'll say here is that if you are a financial advisor who happened to stumble across this video, or your clients sent you this video, my offer to you is find a way to get a hold of me. All of my information is in the description below here, my contact information, my email. website, everything is in there. Send me an email, send me your greatest fear about Bitcoin, and then we'll set up a 30-minute call for free. And we can figure out a way to help your clients get a safe and responsible allocation to Bitcoin. That's my offer to you, completely free. Because, the thing that we have to do here is continue pushing this forward. And the financial advisors of the world are the people that have a lot of people's trust. They've been their main rock for a lot of years, helping them get through the stock market ups and downs, helping them make a good allocation to each asset class responsibly. But it's different now. And I think that there's way too much at stake here to continue to ignore Bitcoin. So my offer to you is that I want you to email me. We'll set up a 30-minute call. I'll answer any questions you have. I'll explain anything that you want explained. And then hopefully, as I said, you can start helping your clients get a safe and responsible allocation to Bitcoin. So that's my offer to you. I do want to give a big shout out as well, because it's important to do. A big shout out to my friend Crysler and a couple other financial advisors in my life who are embracing Bitcoin, who are talking to their clients about Bitcoin, and who are sending their clients to someone like me to have a real good conversation with them, because they realize that they're not at a place where they can have a conversation, a very informative discussion around Bitcoin. So they're contracting people like me to have these conversations. So one thing I would say is, if you are somebody who has Bitcoin but still has a bunch of your assets in the old system and you're trying to get them into Bitcoin or Bitcoin related products, and if your financial advisor is still hesitant and still saying no to Bitcoin, it's time to leave them. It's way past the time to leave them. They've had more than enough time to look at this stuff themselves. There's way too much at stake here. And, it doesn't really matter how long you've known them or how friendly they are to you and how much, they gave you a box seat to the Jets game last week. There's way too much at stake here for them to continue ignoring Bitcoin. So if your financial advisor is somebody like that, just leave them. Say, I appreciate everything you've done, but I can't put all of my wealth and trust in somebody who's too stubborn to even consider Bitcoin. And if you want a new guy, let me know. I'll put you in touch with Crysler. He's one heck of a guy. He is embracing Bitcoin, and there's going to be more and more advisors who do. So in the meantime, if you're a financial advisor, this is your opportunity to be the 5%, to be the difference, and to do a service to your clients that nobody else is doing or willing to do. Stick your neck out a little bit here. It seems risky, it seems scary, but if you actually look at it from a unbiased perspective, this is an absolute no-brainer. So there you go. Bitcoin is the lifeboat. And if you think about the Titanic as an analogy to leave things today, if you think about the Titanic, how many people stayed on the Titanic while it was going down, while everybody was dancing, the music was playing? How many people stayed on there? Probably about 95%. How many people took the initiative, saw what was coming, saw the iceberg ahead, took the initiative, got onto a lifeboat, and paddled their way to safety? It was probably about 5%. So it's very similar to what's happening here in terms of the financial markets and the industry here, is you want to be the 5% who's getting on the lifeboat. And this applies to advisors and people in general. If you're somebody who's taken on the initiative to buy Bitcoin, you're on the lifeboat right now. You're safe, but we need to grab our friends from the Titanic. So be in that 5%, and your family, your great grandkids will thank you in the future.